Hey, hello and welcome, and thank you for attending our webinar today. My name is Ku Lee. I am the Targeted Outreach Director for the Department of Financial Protection and Innovation, also known as DFPI. I know it's right at 12:01. I'm going to give everyone another minute or two to jump in, and we will get started very shortly. Thank you for your patience, and thank you for joining. Hi, and thank you for joining the webinar today. My name is Ku Lee. I am the Targeted Outreach Director. Let's go ahead and get started. I know this is, right at the top of the hour. We have a ton of really great information and some fantastic presenters. Again, this is the Path to Home Ownership webinar, and we will jump right in. So a little bit disclaimer, a little bit of housekeeping for the webinar. This webinar is being recorded, and it will be published to our YouTube channel later on today. Your cameras and microphones have been turned off, but if you do have a question, please submit it to the Zoom's Q&A feature. I have some staff members standing by to help answer the questions, but we do have a dedicated Q&A session at the very end of the webinar to answer your questions live. So also, if you want more information or want to contact us, there's a link to the DFPI's website and also an email address, which you can email us directly. Okay, just a brief overview of what to expect for this webinar. I'm going to talk a little bit about the Department of Financial Protection and Innovation, and then the California Association of Mortgage Professionals will do a presentation on home buying. The California Department of Real Estate will do a presentation about finding a real estate agent, and the California Housing Finance Agency will provide a presentation about their loan programs and requirements. And I just have one slide talking about common home and mortgage scams and frauds. Then afterwards, we'll do our live Q&A session. So let's go ahead and get started. First, I wanted to talk about the DFPI, the Department of Financial Protection and Innovation. Who are we? What do we do? We are California's licensing and regulatory agency of financial products, institutions, and professionals. We conduct exams and ensure compliance. We review consumer complaints that are submitted to us. And we also pursue legal actions against those operating illegally or using unlawful, deceptive, or abusive practices. Another big component that we do is we provide consumer awareness presentations throughout the states to create awareness and help protect consumers from falling prey to frauds and scams. Here's a link that I provided in the slide talking about all the different industries and professionals that we regulate. Okay, enough about me and our organization. I do want to hand it over to Bhutan Harmosian, who is the president of the California Association of Mortgage Professionals. Bhutan, please take it away.
Thank you, and thank you for having us here. I appreciate the opportunity with the FBI. A little bit about us. California Association of Mortgage Professionals is the oldest trade association in the California, established in 1991, helping consumers and both mortgage originators through the path to homeownership by providing advocacy and education. So it's a great association that I have a privilege of serving, and I am hoping that I can answer and provide guidance to our audience here today. Next slide, please. So we already talked about who we are and what we do. If you have any questions, just go ahead and follow us on social media, and we will be more than glad to help you guys with your questions. let's get this path to homeownership started. So making a homeownership a reality. That's why we are here, and that's what we love to do. As part of the purchasing the first homeowner, there's always a lot of questions and ambiguity about what do I need and who will help me. Some of the common answers we provide is making sure you find the local mortgage broker that will work with you on guiding you with your credit history and credit score. Quite often, most people confuse the two, but I would like to make sure that when you're talking to someone, just know that the credit score by itself is not the only determining factor in your home buying process. Your credit history is just as important. Getting your documents, and just to take a quick step back, we will go through all of these in details, but these 5 items listed here are the high level of what you will need. So your documents, paperwork such as income, bank statements, tax returns, employment history, and anything else that is directly affected to your credit or to your income will be needed and asked for. Contacting a local professional that can help you and answer your questions, like the local mortgage broker, is essential because they will have the knowledge and expertise to help you explaining why and how every piece of document is needed. And the most important part is, I want to get a loan, how much do I qualify for, and what mortgage program do I qualify for? So we will touch through all of these 5 items throughout this process within the next 10-15 minutes for you guys. Next slide, please. Initial consultation, finding the person that can actually listen to you, hear you, understand what your needs and wants are, and explaining it to you in a non-mortgage professional way. I like to say, I'm a mortgage originator. I know what I know, but it's my job to explain it to my clients and to the consumers in a way that you actually understand it, not the way that I would like to explain it. So what I encourage and advise and invite all of you to do is, before you actually meet with your mortgage trust advisor, write down all your questions. And these questions don't necessarily have to be specifically about a home loan itself, but it has to do with your affordability, ability to repay the loan, what you like to know about the mortgage process, and what you like to learn about the mortgage. So making sure that you talk and gather all the information up front is extremely important. You want to have as much clarity as possible about what you're getting yourself into and what the long run and what the goal end result will be for you. So talk to the mortgage professional, and just remember, you are the one that is asking the questions. And if the answer doesn't make sense, please feel free to ask them to provide the answers in different ways until you have the clarity that you want to have. Next slide, please. Let's talk about the mortgage process itself. It could be a daunting process. It could be scary, especially if you have heard horrible story about it. But I feel like if it is explained properly, you will have a pretty good understanding that it's not as scary as it sounds. The pre-qualification process is just giving you an idea of what kind of loan program you qualify for, what options are available for you, what kind of property you can purchase, what kind of loan amount you're looking at, and what your payments are going to be. Finding a home loan, we will get to that. There are amazing experts out there in the industry, licensed by the Department of Real Estate, that help you with the process of finding your dream home. Processing and underwriting, it's probably the lengthiest portion of the actual process. This is the part that a mortgage lender will actually review, analyze, and assess your ability to repay the mortgage. They will go ahead and ask for many documents based on your circumstance and come back to you with the decision. An appraisal is a process that will take place most often throughout the home buying process, especially when you're obtaining a mortgage, to determine the value of the property, to determine the habitability of the property and the safety of the property. The appraisal experts are extremely important through the process because they help not only just the lender, but also for the home buyer itself. They will come back and let you know if there are any issues that you need to be aware of as part of their report. And once the appraisal comes in, typically speaking, the lender issues a final approval by reviewing the appraisal to make sure you are safe to purchase the property. And the final approval is your seal on starting the closing document. This is the time where everything gets exciting because now you know your property is just steps away from taking possession of the key and walking into a home. And lastly, moving day. This is the day that you are the proud owner of the property, and now you have the ability to call it home. Next slide, please. The mortgage qualification process, the components that a lender will review, and you need to be prepared and ready for it, is your income. It will help the lender to know how much you can afford to pay on a monthly basis as the loan, based on the interest rate and the loan amount that you're taking out. The down payment, there are many different programs that we will touch on, but great programs. Some programs have down payment assistance options available, and there are some other products with as little as 3% down that you can just go ahead and purchase the property. And then the credit score and credit history. Well, this is a ongoing conversation where we always know the FICO scores and the credit history is constantly moving up and down based on our credit utilization. So we can go ahead and talk about that as well. Next slide, please. The list of the documents, make sure as you're meeting with your mortgage broker, you have your clean copy of the income documents, W-2s, pay stubs, your start date, end date within the past 2 years. Bank statements are extremely important because they show the down payment availability of funds that you guys have for the purchase of the property. Credit report, they will need to review the mortgage credit report. And it's extremely important to note that it is different from the consumer credit versions that you obtain as part of the credit card sign up or even utilizing companies like credit card. Most often lenders use a different credit review system because it provides them with different level of information. Your identification card, whether it's a driver license, California ID, passport, it's just items that is needed. It has to be a legal document issued by the state. So make sure you have all of those ready to be reviewed by your mortgage broker. Next slide, please. The mortgage qualifying factors. This is the core of actual home loan process. Why do they look at the income? It's because they want to make sure you're taking on a loan, you're taking on a liability that you have the ability to repay. You're comfortable on writing the check every month at the end of the month to your mortgage lender. So they will review this process differently based on your circumstance. Someone who is a self-employed applicant versus someone who has an hourly job versus someone who gets salary. They all have different type of qualification process because of your ability to repay guidance. They want to make sure at the end of the month, you're comfortable writing that mortgage check. Next factor is credit. Like I said earlier, it's not just about the credit score itself, but it's also about your credit history. They will review your past payment history. They will review how you treat your other creditors. And all of that comes into a picture when they're trying to take on the idea of how well you take care of your creditors. So make sure you are not just being focused on a higher FICO score, but also a good credit history as well. And then few other items that we take into consideration is your down payment or capital, basically. It's the money that you have access to pay for your down payment, to pay for your closing costs, to pay for your expenses. And all of that is important because not every borrower will qualify for every mortgage program. There are many different mortgage programs available for different applicants. So when you're talking to your mortgage broker, you want to make sure you also understand what mortgage product they're offering you. That will determine your down payment requirements and closing costs, which is the amount of money you have to write for your inspections and whatnot. The collateral is basically the instrument that your lender will use as a security when they're issuing a loan. And the collateral most often is your real estate property that you're purchasing. They utilize the appraisal report as part of the collateral valuation to make sure the property value is right and to make sure the property is safe and habitable for you as a home buyer to complete the transaction. And these items will be reviewed as part of the underwriting process for getting a home loan. Next slide, please. So let's talk about different home loan programs. We know that there are many different products out there, and some may qualify for all, or some may just qualify for a specific. Conventional home loans, these are your typical Fannie Mae, Freddie Mac home loans, probably one of the safest loans out there, 30-year fixed. The mortgage interest rate will never change throughout the 30-year fix, so you have the assurance that your monthly payment will stay the same. Government insured loans through the Department of HUD. FHA home loans, USDA home loans, and VA home loans all fall under the government insured home loans. They have different requirements. FHA home loans is one of the most common home loans that is used for the first-time home buyers. It's a program that allows for a 3.5% down payment, and some of the programs that we will talk about later on today will have additional support for FHA home loans. USDA home loans are great for people that are looking to purchase agricultural properties, farmers, ranchers, and different type of properties that actually are within the agricultural zoning. And veteran home loans is for our heroes that have basically served and have earned the right and are qualified to get for VA home loans. Some of the other programs that I'm just going to touch very quickly on is these are investor home loans or self-employed borrower home loans or private financing. Again, different criteria and requirements, but these programs are available out there for you if you qualify and are eligible for. Next slide, please. So let's talk about a conventional home loans requirements. Typically speaking, minimum FICO score required for a Fannie Mae or Freddie Mac is 620. Mortgage insurance will be attached when you're putting less than 20% down payment, and you can basically obtain a Fannie Mae or Freddie Mac home loan with as low as 3% down payment. Mortgage insurance is not for the life of the loan on conventional home loans. It's an instrument that allows you to obtain a loan when you don't have the 20% down payment. And with that in mind, you also can take down payment assistance programs that we will talk about later in conjunction with your 3% down payment to help with closing costs or even down payment itself. Next slide, please. VA home loans, like we talked, this is a great program for qualified veterans. If you have served and you're qualified, there's no down payment requirement, there's no mortgage insurance. Interest rates are typically the lowest of all mortgage programs out there. And I want to go ahead and include a great partner in the state of California, calvet.ca.gov, that helps us and all the mortgage originators out there with veterans home loans. Please make sure you visit their website to check the programs that is available for you. Next slide, please. Let's talk about mortgage insurance. So private mortgage insurance is a secondary insurance for lenders when a home applicant puts less than 20% down, and this could be anywhere from utilizing a down payment assistant or just going with a standard 3% down payment. There is an additional monthly payment that will be added on to your principal and interest mortgage payment. This insurance helps the lenders to offer lower down payment loans through Fannie Mae and Freddie Mac. Because of the lower down payment, lenders usually have a higher risk in an event that there is a default in place, and the mortgage insurance provides the security for them to know that if there is a default, they will be secure on that collateral. So this is extremely important to make sure when you're talking to someone about buying a property, and if your concern is that you do not have the 20% down payment, or if they talk about additional payments, which is mortgage insurance, to know this is to help you as a home buyer to be able to achieve the home buying process. Next slide, please. There are two types of mortgage insurance. there is a mortgage insurance on conventional loans. The program is not for the life of the loan, and the mortgage insurance can be removed. The monthly payment can be removed once you reach 20% equity. So it's a great tool to get into the mortgage by itself when you have less than 20% down payment. And then there is a mortgage insurance that will be attached to the Federal Housing Administration loans, FHA loans. Those mortgage insurances are slightly different. They are for the life of the loan and they cannot be eliminated. So when you are talking about mortgage insurance, please make sure you ask your mortgage broker to let you know which program they're talking about and what the difference will be between the two. Next slide, please. Down payment. It could be as little as 3% all the way up to 20% or even more. There will never be a stop limit on how much you can put down payment, but the minimum requirement for the down payment will depend on a mortgage program. As we saw earlier, if you are qualified and eligible for a VA loan, there is no down payment requirement. For FHA loans, there is a 3.5% down payment requirement. For a conventional, there is 3% available down payment requirements. And then there is additional programs like down payment assistance that can also help you with the minimum down payment requirements. Some mortgage programs allow you to accept gift from a relative, a family member, to cover the down payment requirements. So if you don't have the funds directly in your bank account, that could still be reviewed utilizing gift funds and make the reality a possibility. Or if you have a 401k and retirement funds, typically speaking, you could take out a loan depending on your qualification and eligibility against your 401k or your retirement account that you may have set up with your employer. So these are the available options that can be considered for covering the down payment or what is required on them. Next slide, please. Here's a chart, just very quickly going through it. Different type of down payments for different type of programs. If you're an investor, typically speaking, you're required to put in anywhere between 15 to 25% down. 20% is the highly recommended down payment process. With 20% down on a conventional loan, you do not have to basically get a mortgage insurance. So that will help you on your monthly payment. 10 to 5% down payment, it's recommended. And the lower the down payment goes, that's when you have to worry about the higher the monthly payment will be, because the less money you're putting down on your down payment, the higher mortgage balance you will take on, which will result in a higher monthly payment. Next slide, please. A few other things to consider. Cash to close. So when you're trying to purchase the property, you have to take into consideration that there are other costs besides the down payment. Down payment is just for what the requirements of the loan are, but whenever you're purchasing the property, there are prepaid items such as property tax, homeowners insurance, mortgage interest, and other items that depends on a specific property that has to be prepaid upfront to the appropriate entity. If it's property tax, it could have to go to the county tax assessor. Homeowners insurance companies require you to pay the first year upfront, and the mortgage interest goes to your lender. Closing costs, these are the actual costs for purchasing the property, and sometimes will affect if you're getting a mortgage as well. So when you're going through the process of purchasing the property, there are additional companies like title company, escrow company that are there to serve you and protect you. There are appraisal company, home inspection companies that will help you throughout the process. And all of those will be considered as part of the closing cost for your loan purposes. And then talking about points and credits, I know it comes up quite often. How many points am I getting charged, or how much is the credit? So you have to take into consideration that mortgage interest rates change on a daily basis. And that is a question that you can ask your mortgage broker and they should give you the answer. But just to give you an idea on the points and credits by itself, typically there is a charge when you're trying to get a home loan. The higher the interest rate goes, the lower the points will become, or at some point you can actually even receiving a credit, and vice versa. If you're looking to get a lower than usual interest rate, then you have to pay a certain dollar amount to receive that interest rate. So you have to keep in mind the points and credits are directly affected by the mortgage interest rate that you're trying to obtain on that specific day. Next slide, please. Should I pre-qualify for my loan? Absolutely. It's probably the most important part of the home buying process. Before you actually start looking at the properties and kind of have an idea of, I like that property or whatnot, you would like to know what the monthly payments are, how much can you afford on a monthly basis, and what other expenses you should take into consideration. So the pre-qualification process that you talk to your mortgage broker before you actually start the home search allows you to know what kind of expenses you will be looking at when you go through the mortgage process. Your estimated interest rate, your estimated monthly payment, what would be the property tax for the property? If you're looking at the type of property that has a homeowners association fee, typically speaking, these are on the condominium properties, what will be the HOA fee for that specific category of the properties you're looking for? Depending on the location of the property, you may be subject to purchasing just more than a hazard insurance. You may be required to purchase a flood insurance. So going through the pre-qualification process and sharing your thoughts and goals with your mortgage broker allows them to do their analysis and let you know what else will be needed for the actual property purchase. And it all depends on the information you provide to them. And it will only help you to have a better understanding of your overall monthly obligations. Next slide, please. How do I pre-qualify? So this is a pretty basic few questions that you will ask your mortgage broker by giving them the ideas and what it is that you're looking to purchase and providing them with the income documents you have, your credit history, your assets, and they will go ahead and review the documents and give you their answer. Typically speaking, you will receive a pre-qualification letter when you share these documents and information with them. That pre-qualification letter helps you talk to your realtor, to your real estate professional, and let them know that this is your desired purchase price and the type of property you're looking to purchase. And you and your real estate professional at that point can start working together on finding the property. Keep in mind, the pre-qualification letter is not the same thing as a full approval letter. The full approval letter requires an in-depth review of everything. So you can go ahead and get started with the pre-qualification letter, get an overall idea of what you qualify for, what you like, what you don't like, and then from that point on, you can take on to the next step. Next slide, please. And this is a gist of the home buying process that I try to shrink into 20 minutes. Feel free to contact us, California Association of Mortgage Professionals. Like I said, we are not a mortgage lending entity, but we are one of the oldest trade associations. So if you have any questions, if you have any concerns, or if you like to have a copy of the slide, just reach out to us and we will go ahead and connect you with the right person. And looking forward to seeing everyone.
Thank you, Tan. And I do want to say a couple different things. So mortgage loan originators, mortgage servicers, and escrow companies are licensed and regulated by the DFPI. And we're super happy to have a partnership with the California Association of Mortgage Professionals, helping educate consumers on the mortgage process, the home buying process. So thank you again, Hutan. With that, we will transition to the California Department of Real Estate with Rick Lopes. Rick, take it away.
Great, thanks, Ku. Thanks very much. Happy first day of summer, everybody. My name is Rick Lopes with the California Department of Real Estate, or DRE. We are the state government agency, been around just over 100 years. We're responsible for regulating the state's real estate industry, including licensing more than 435,000 real estate agents in the state. Next slide. Okay, so a good place to start is with the real estate agent. Let's just define quickly for you just what a real estate agent is. They're someone who arranges a real estate transaction, putting the buyers and sellers together and acting as their representative in any negotiations that take place. The real estate agent is usually paid by the seller as a percentage of the property's sale price. So in other words, the more you pay for a property, the more commission will go to your real estate agent. Definitely something to keep in mind as we go through the presentation here. And as I noted, all real estate agents in California are licensed by DRE. Our licensees do have to meet minimum education requirements. They have to pass an exam before getting their license. And then during their license, while they hold the license, they are required to take continuing education courses. Next slide. Now, most of us have some idea of the importance of working with a real estate agent if you're either buying or selling a property. A 2021 survey of home buyers and sellers found that 87% did use a real estate agent when they bought or sold a property. Now, 47% of those said they were referred to an agent by a friend. That's a really good way to find it. Recommendations are a great way to find a real estate agent. 7% used the builders or the builder's agent, and that's usually in situations when you're purchasing a brand new home in a brand new subdivision, and the builder is also the seller. And a statistic that makes us the happiest here at DRE, 90% of the buyers and sellers say that they would use their agent again or recommend their agent to somebody else. So real estate agents, a great investment especially when you're purchasing a property, because they are paid for by the seller. Okay, next slide, please. So here's how the real estate industry is set up in California. There are two types of real estate agents. The first is a broker. That's somebody licensed to conduct a real estate brokerage business, or more simply said, the brokers are the bosses who are responsible for supervising the real estate brokerage. The brokers are responsible for supervising all salespersons that are associated with them. About 29% of the real estate agents in California are brokers. Now, a broker can be a one-person operation where you're actually working directly with that broker, or, and we're seeing this more and more every day, they can have dozens, if not hundreds, or in some cases, thousands of salespersons working under them. Now, a salesperson is the other type of real estate agent. 71% of our licensees are salesperson. And as I mentioned, the salesperson is licensed to work under the control and supervision of a licensed broker. Likely, you're going to be dealing with a salesperson. So this is the other piece of information that's not noted in the slide, but I did want to at least touch on it. There are three terms that you might see when it comes to a real estate agent, especially in marketing and advertising. There'll be the terms either teams, group, or associates. Now, within a brokerage, you can have a group of agents all to come together and market themselves almost like a separate company. For example, if you use my name, you can see something called the Lopes team, or the Lopes group, or Lopes and Associates. So when you see that, understand that the agent's marketing themselves as part of the team, but there is still a broker who ultimately is responsible for supervising those agents. And those names, again, are used primarily for marketing purposes. In a couple of minutes, I'll show you actually how to look up a real estate agent's license on our website and how to tell if they're a broker or salesperson, and if they're a salesperson, which broker they're actually associated with. Okay, next slide, please. Okay, that's the licensing aspect. Now, there are three types of relationships that you can have with your real estate agent. The first is serving as a seller's agent. In this case, the real estate agent is representing the seller only. So if you're selling a piece of property, your agent would be referred to as the seller's agent. Now, on the flip side, and probably the majority of people who are here with us today, if you're looking to buy a piece of property, your real estate agent is going to be called the buyer's agent. In this case, they represent the buyer only. Now, there is one last kind of relationship called a dual agency. This is when the real estate broker represents both the seller and the buyer. Now, both the buyer and the seller might have their own agents. In a dual agency situation, both of those agents would work from the same broker. If they're even in different offices, different teams, some of the other terms I've used, they actually are working for the same broker, and that's what makes it a dual agency situation. Now, we would, even though it's legal, we would just warn you to be careful, because it can lead to difficulties in the negotiation of the sale price and the terms of the sale. Since the real estate agents are paid by commission, they might not fully fight to get the best price for the property for you if they're also making money off of the selling side. Now, I'm not saying that that there's never been a dual agency situation, but it is important just to be aware of that potential conflict or challenge if you are in one. And we'll talk more about that in a moment. Go to the next slide, please. Okay, with that in mind, here's 4 tips now you should remember when hiring your real estate agent. First, be sure to interview several agents to determine their level of experience in the area that you want to purchase. Depending on where you're looking to buy, it might benefit to have somebody work with you who's intimately familiar with that area. For example, here in the Sacramento area where we are right now, there's different parts of the city of Sacramento that have different home values, different feelings, and it would be important that your real estate agent would understand that. Oh, there's also suburbs in all directions out of Sacramento, including cities that fall into 4 different counties. So you want to be sure that your real estate agent is familiar with the county if you're working in a big metropolitan area like we're in. So let's say, for example, I wanted to buy a home in the city of Roseville, which is a suburb of Sacramento. I would really benefit by having an agent who's been involved with both buying and selling homes in Roseville, especially if it's a specific part of Roseville. There's parts of it that are much different in cost and layout and things you should know. Number 2 and 3 actually tie together. Make sure your agent is properly licensed with DRE and review disciplinary actions and be able to assess whether or not it's important in your selection of the agent. So get the agent's license number. It should be on the business card. If you don't see it anywhere, ask them for it. In a moment, I'll show you why that's really important. And number 4 actually ties in with number 1 a little bit. Ask the agent for their activity list. The list should itemize all sales that they closed within the previous 12 months and should include the property location, as well as a list and sale price. You want to see if the homes are in the area where you want to buy and in your price range. For example, if you are looking to buy a small 3-bedroom home and you look at their activity list and you see they're selling big 5-bedroom, 5,000 square foot homes, it may not be the agent for you. They may not work as hard to sell to help you buy a 3-bedroom as they are working with people who want to either purchase or sell a 5-bedroom place. So things just to keep in mind. Okay, next slide, please. Now, here's the way that you can look up the license, where you can look up the status of a real estate agent's license. Just go to the Department of Real Estate's website. The address there you see is dre.ca.gov. On the homepage, you'll see an area called Essential Information. You just click on that where it says Verify a Real Estate License. This will take you to the page you see here. You can search the agent by either their name, the company name, or as I mentioned earlier, the license number. And by far the most accurate way is the license number, especially if the agent has a fairly common name. With 435,000 real estate agents licensed in the state, it's likely that that more of a real estate agent is going to have the same name many times. If you happen to have a name like John Smith, there's probably got to be a couple hundred real estate agents in California with that name. So the license number is the best way to look them up. That's how you're going to make sure that you've got the right person. Okay, next slide, please. Okay, so here's a couple of examples what you'll see when you actually plug in a license number. In this case, the real estate agent is going to check out fine. You can see on the first line that they are a licensed salesperson. I mentioned earlier, broker or salesperson, that's where you'll tell that. Now look at the 2 green arrows. The first of the green arrows is the license status. And here you see that they're licensed. Right above that is the license expiration date. Real estate licenses are good for 4 years. Right below you see the status is, below the status you see that the license was originally issued. There's a date for that. Now, the other green arrow shows the responsible broker, which I did note earlier as well, is all salesperson are tied to a broker. Okay, so if you click on the broker's license number, you actually can find out information on the licensed broker, including how many salespeople they're responsible for. Then at the bottom is the comment section where you see there's no disciplinary action being disclosed on this agent. So in our case here, this real estate agent passes the test. Certainly you can move on to the next step of trying to see if they're going to be a good fit for you. Next slide, please. Now, this is an example of a deal where you're deal killing red flags that you're going to see. If you look at the top green arrow, you'll see that this license was revoked or taken away by DRE. If you look down to the responsible broker, you see that they don't have one. As I mentioned a couple of times, all salespeople have to be associated with a broker. So if you're looking on it and you see that there's no association with a broker, that tells you they're not legally able to work. So at the bottom, in this case, because it was a revoked license, there was actually court cases. And so the documents associated with the legal action are there, and you can click on those and read those if you wanted to find out more information. Okay, we'll go on to the next slide, please. Finally, we just wanted to go over just 3 real estate scams. I know that Ku's going to be giving some other real estate mortgage scams in a couple of moments, but I did want to touch on 3 very quickly. The first has to do with real estate trust funds to make sure they're protected. There's been an increased concern with the recent failure of a handful of banks in the state. So we want to make sure that when you're going to work with the real estate agent, make sure that they deposit this into a designated trust account at a financial institution that's located here in California, or they can put the funds in a fiduciary trust account, which is insured by what's called the Federal Deposit Insurance Corporation for up to $250,000 for each beneficiary. Don't want you to get too worried about that, but not doing so if that bank should happen to go out of business. You may have some problems with that money. The next one has to do mostly with people who rent. And for those of you who are looking for a home right now, because it does take time, rental is probably the way you're going. So I did want to note a rental scam that we're seeing a lot more here at the Department of Real Estate. This is where the scammers are going online and taking information from current for sale listings and then posting those homes as for rent on other websites. In some cases, the scammers have used homes that were out to rent a few months ago and they make it look like the home is back for rent now. The scammers offer the home at a ridiculously low price and try to get you to electronically transfer your fees, deposits, or even rent without ever seeing the property. It's becoming more and more prevalent with things like Venmo and Zelle and some of the ways you can just pay over your phone. So in a tight housing market, we don't want you to let your guard down. We've got a link to the consumer alert when you get these slides later. You'll be able to go there as well. The last one is a QR code scam that we're just starting to see rear its ugly head. Our warning is to be careful anytime you use your phone to shoot a QR code. Excuse me, we're seeing cases where scammers are putting a sticker with a fake QR code on a real estate for sale sign. So you might think when you come up to that house that it's going to give you a link to the home's listing or where you can find out more information, when in fact it may actually take you to a phishing website. Maybe it'll infect your phone with malware, or maybe even use your email account to send emails from that account. So be careful when using QR codes. Next slide, please. And that concludes the presentation. I did want to note, though, if you want to learn more information about what I've covered, we'd invite you to visit the Department of Real Estate's website. Again, the address is dre.ca.gov, and be sure to check out our First Home California program. We're just starting up an outreach program targeting first-time home buyers. So there on our website, you'll see more tips. For those of you hoping to be first-time home buyers, we'll be starting up our workshops and webinars later this summer. So if you're interested as a first-time home buyer, please keep an eye out for that. Okay, cool. Going to go back over to you.
Thank you, Rick. That was Rick Lopes, Assistant Commissioner, Communications Publications with the California Department of Real Estate. A lot of fantastic information, and we're happy to be a partner with the California Department of Real Estate, or CalDRE. Next, we have Eric Johnson, who is with the California Housing Finance Agency. Eric, go ahead, take it away.
Thanks, Q. Appreciate it. I did see some questions in the chat about down payment assistance programs, and that's what mostly I'm going to be talking about. So hope you're able to stick around and hear what I got to say. So we are a lender. We work very closely with a lot of people in Hutan's group, the California Association of Mortgage Professionals. So what you're going to do if you want to apply to our program is you're going to work with one of our approved lenders. We also have about 90 preferred loan officers in California, folks who have done at least 8 of our loans in the past 6 months. They know our programs backwards, forwards, inside out. I highly recommend that if you can, if there's one in your area, that you work with one of them. You can find a listing of them. They're all organized by county. But in today's virtual world, you can work with any loan officer in any part of the state to get your loan done. That's going to be all at calhfa.ca.gov. Our website is down here at the bottom of the slide. We have limits on income, but they're very generous. They're about 1.5 times the area's average income. So in, say, Sacramento County, I believe the income limit right now is about $190,000. It doesn't matter what size family you have. It's all the same limit. We also have an education program. We think it's really important that people understand all the terms of what's happening for their mortgages. As we saw maybe about a dozen years ago in the Great Recession, there's some people who did not understand the full terms of their mortgage, ended up losing their house. We don't want that to happen. We want to make sure that when you buy a home, this is something that you're in and you know you can make the payments for. We think that's really, really important. Next slide, please. We have a couple of different types of loans. I think Hutan mentioned the USDA and VA loans, and also about conventional versus government loan programs, the different mortgage insurance requirements. You can read more about that yourself. Again, your preferred loan officer is going to be the best resource for this. There's a lot of technical terms that are a little bit confusing. It can be honestly a little bit scary. And that's why it's really important to have those two people on your team, the really good real estate agent that Rick was talking about, and a really good loan officer or broker who can guide you through the process and help you out with the forms, A lot of the vocabulary is a little bit confusing. I don't think I knew what escrow was until I was 35 years old. So it's really important to have those people on your team. Next slide, please. Again, this is kind of what we do. And let's just skip this one and go to the next one. This is really the heart of why CalHFA exists, the down payment. We've found that so many people, they've got the steady job, they've got the income, but they don't have the money to make that down payment, and that's where we help out. Our programs can help you out with that 3% or that 3.5% that John mentioned that you need for the FHA or conventional loan programs. What we do is called a silent second loan. In addition to that first loan you take out for the majority of your mortgage, we will also lend you that 3.5% that other folks say you need to have in cash to get your loan started. And you don't need to make payments on that 3.5% until you either refinance or pay off that first mortgage, right? So that's why it's called the silent second loan. And it's a really powerful performance thing for us to do. We helped about 5,600 people last year in California. The most you've ever helped in a year is about 13,000. So it's possible. You can do it. A lot of people are worried that, oh, I don't have money in the bank. I don't have this. I have to be able to save this nut with first and last month's rent, expenses, that sort of thing. But you've got that continuous income. Our programs can really make a difference for you if you've got that steady income, that decent credit score, and the ability to make those monthly payments on your mortgage. And there are some places in California where right now the average rent is actually more than the average mortgage payment. So if you're renting, please take a look at our programs at calhfa.ca.gov and see what we can do. Another really valuable resource is home counseling. We have an agreement with about 80 home mortgage counseling firms across the state. These are all certified by the Federal Department of Housing and Urban Development. And we have an agreement with them that you can go in and get free counseling. If you have problems if you're in a house, you have problems with the mortgage, if you're having problems with your rent, these folks can also help you work through those issues and get you started on the path to home ownership. We have folks who have worked with their counselor or their loan officer for 6, 9 months, even up to a year and beyond, to make sure they've got their credit scores in order, make sure they have their finances, make sure they can make those down payments and stay in that home. I really recommend you visit our website and look at the mortgage counseling page, because those people can really help you out and help you get a plan on the path to home ownership. And it's a path. It's not you go in and boom, you're done. It's you take that first step and then you take the next step and then you take the next step. It's a really good way to think about it, but you have to take that first step. I go to shows and conferences and staff tables, and I'm always amazed by the number of people come up to me and say, I used your loan to buy my first home, and it's changed my life. But you have to believe that you can do it and take that first step, make the call up one of the preferred loan officers on our list, call up one of the real estate agents that your friends recommend to you, and take that first step. You can do it. They say it's the California dream, and people like me and Rick and Hutan are here to make that dream into a reality. Please drop me a line. My email is ejohnson@calhfa.ca.gov. That's ejohnson@calhfa.ca.gov. Be happy to make you some references in terms of loan officers. You can do it. Back to you.
Thanks, Eric. And so before we go to the next slide, I do want to say I've had a number of friends who have used the CalHFA loans, and it's worked really fantastic for them. I always plug it wherever I go. So that was Eric Johnson, Information Officer 2 with CalHFA. Moving on, so I do want to highlight some common home and mortgage scams and fraud. So the first one is a property title scam. That's when someone offers to give you a loan or fast cash in exchange for taking over your mortgage and title. That sometimes is part of a loan modification scam, and that's kind of or loan modification fraud, which is a series of different types of scams. So there's one version, which is a leaseback or repurchase scam, which is someone offering to give you money to take over your mortgage, your lease. And so they are offering that, they'll buy your home, but you could stay in it as a renter. And there's issues with that as well. Or you'll sign over your title, but then they'll take it over and not lease it back to you. So that's part of that lease back or repurchase scam. There's also refinance scams and different schemes. So again, refinance scams is someone offering to refinance your loan for you. And then as soon as you sign over your title, they just take it over without paying your loan. And there's some refinancing schemes, which include like loan churning or loan flipping, which is, again, getting you through the refinance process, but maybe having very large fees for the refinance, or just a lot of different costs associated with refinancing your home. They might be promising to get your monthly payments down, your monthly mortgage down, but it essentially just keeps adding a larger cost, or even changing your mortgage rates, right? And then there's also a foreclosure rescue fraud, which is, again, if you're in distress, it usually makes you more vulnerable to these types of scams, especially if you're heading towards foreclosure. Maybe you've missed a couple of payments on your mortgage. You might be looking for any kind of help, and these individuals might be out there offering to, again, take over your mortgage or give you, short sell your house of some sort. So just be aware that those types of different frauds. There is an interest rate and bait switch type of scam out there, where mortgage rates, they offer a mortgage rate that is lower than the market interest rates, but usually there's a lot of different hidden fees, or even they just get you into the door using some introductory rate, and then at the end of the day, when you finish or end up signing for the loan, it ends up being a larger APR, right? And then there's also a home loan closing scam. This is something that I've heard a lot about, which is essentially a phishing scheme, or it's a scheme where a scammer basically takes your information. Maybe maybe you're on social media and you're posting that you're going to be closing on your home soon, or you're buying your first home soon, you're closing, and they reach out to you and they act like they're your mortgage company. Maybe they act like you're your escrow, you're a title company, and they ask you for your wire information or your bank information, and they end up taking all your money. So be very, very wary of those types of scams. With that, I know we have so many questions, not a lot of time. I do want to apologize that originally we had set this to be a 30-minute webinar. There's so much great information that it is an hour long. And if you were not able to make it or stay here for the whole time, the webinar is being recorded, and it will be a webinar recording, and a copy of the slides will be sent to everyone who registered for the webinar. Okay, let's jump into the questions, because there are a lot. I'm just going to go right from the top. And to any of my presenters here, please feel free to answer the questions. So Rick talked about down payment assistance. If you do want to get in contact with them, I on the next slide, by the way, I do provide contact information for all my presenters. So the next question is, there are lots of advertisements about down payment assistance. Do state workers qualify for this? Even though they work for the state, are there multiple down payment assistance programs available?
Yeah, I'm happy to take that. State workers, we don't have specific set-asides for state workers. I'm gonna answer the next question also. I mean, you could tap into your CalPERS account, but there's pretty stiff tax penalties for using your retirement accounts for anything other than retirement. So I'd definitely talk to a financial advisor about that. There are also some city and county down payment programs. I'd advise talking to your city or county housing office, and those usually can be layered and put on top of our CalHFA programs. So there's lots of resources. It does take some research, it takes some digging, and it probably takes multiple rounds of phone calls to get to the right people if you talk to a city or county housing office. But the money is sometimes there. It's worth digging.
Perfect. Thank you, Eric. Okay, moving on. And I think you might have answered this a little bit, but maybe just kind of reiterate. are there, well, I think you just answered it. Well, next question. Are there any legitimate shared equity programs available?
Uh, Legitimate is kind of a squishy word. I do know that we offered the California Dream for All program a couple months ago, which was a shared equity program. The governor and the legislature are negotiating whether there will be more money for that program in the future. I don't have any definitive answer on that, but definitely keep your eye on our website about how that might work. The next question is, are any 40-year mortgages? I'm not aware of any 40-year mortgages right now. I think pretty much all mortgages are 30 and below. There's some 20s, some 15s. There may even be some 10-year mortgages, but in terms of a longer repayment period, I'm not aware of any.
Yeah, let me ask Hutan. Hutan, are you aware of any 40-year mortgages that are available in California at least?
There are certain programs. I mean, it all comes down to qualification and eligibility, but there are few investors that do offer 40-year mortgage products out there currently.
Okay, thank you. Is there any program to rent or own property? Rent to own property.
And again, I'm not, there's no program through the state of California, and I know that for sure. I defer to Tan on that question also.
All right. So the rent to own programs are, it all comes down to the actual owner of the property and the agreement you need to make. It's not going to be, like Eric said, it's through the state of California, but there are rent to own opportunities out there. So this will go back to working with, as Rick and Eric both said, working with the right professionals where basically can be your guidance and resource on securing these specific programs. The short answer is yes, there is a rent to own programs, but not through the state of California, as Eric said, that I'm aware of.
Perfect. Thank you, Eric. Thank you, Tan. Next question. Can I use the same real estate agent from different cities, or do they have specific jurisdictions?
Yeah, I'll jump in with these. Actually, it's like we got 2 or 3 in a row here, so I'll go ahead and handle all those. Yes, different cities does not matter at all. The only requirement is the California license. They can work anywhere in the state. As I mentioned during the presentation, you do want to try to find somebody who's an expert in the area that you're looking at. If it happens to be somebody from a different city, that's fine. That's entirely your decision. Okay, do I need to use a real estate agent if I'm looking to buy a newly built home? Well, the bottom line is you don't need to have a real estate agent at all. We would recommend that you do have one. They're there to benefit you, and they're paid by the seller. So when it comes to a newly built home, you don't, but there's no reason why you couldn't. So that is entirely up to you. Next one is, if I had a bad experience with a real estate agent, where can I report them? That would be to the Department of Real Estate. You can file a complaint with us. The address for our website, again, is dre.ca.gov. You can file the complaint online with us. Next one is, I believe I read that all disciplinary actions are removed from licenses, and you have to call a number provided to see if there's any disciplinary actions. There is a process out there where they can petition to have their disciplinary action removed from our website, but there's lots of steps they have to go through, and they have to wait for at least 10 years from the time that the disciplinary action happened. They have to show signs and things that they've done to rehabilitate themselves. So there is a formal process in the law. It doesn't happen haphazardly. If you think there should be something, or if there's something that's not online, I'd encourage you to reach out to me. I know that it's got our email addresses there, and we can check into that to see if there's just something a burp in the system. But disciplinary it's important. As a consumer protection agency, it's important that the disciplinary information is out there. I believe that's all of the real estate agent questions.
Perfect. Thank you, Rick. I know it's kind of lightning round. We're trying to wrap this up quickly. Last question. Are there any programs for what feels like the forgotten middle class? It seems that most programs are geared toward low income buyers, but there are so many middle class buyers in this expensive state who aren't wealthy enough to get assistance. Eric, did you want to answer that, or?
Sure, it's certainly a challenge to be in that missing middle. And I know that the legislature and the governor are always trying to figure out how do we reach the folks so that we're assisting the people who need to. We try to design programs at CalHFA that can help they're specifically designed for low and moderate income home buyers. And we try to set the income limits where they need to be, but we have to work with one of our sister agencies and also the federal government in setting those income limits. So unfortunately, sometimes they do get a little wonky with Sacramento having income limit more than Los Angeles, because Los Angeles County is so big and includes a lot of places that are very much lower income. So that gets factored into the average for all of Los Angeles County. It's a tough problem, and all I can do is encourage you to work with a housing counselor to see if you can find a place that works for your income and your budget.
Perfect. Thank you, Eric. One more question. Here we go. How does poor credit affect the processing of applying as a first-time buyer? Might be a question for Utan.
So the poor credit by itself is a subjective word. There are many different programs out there. Credit, if you're looking at a low FICO score, there are programs that basically go as low as 500 FICO score through the Federal Housing Administration program. If there is a reason, there's always a reason for the term poor credit, and that's one of the items that we want to look at and make sure to help identify that problem and solve it. So the poor credit by itself should not prevent you from achieving that goal. There's always a solution. So please reach out and we'll connect you with the right person in your area that can help you get that goal accomplished.
Thank you, Hutan. And just a heads up, the DFPI has a partnership with credit.org. They provide free credit counseling. So thank you, Hutan. It's a great answer. With that, that's all the questions we had. I do want to put up a slide here with all of our contact information. If you do have additional questions or anything that we didn't answer, please feel free to reach out and contact us. This will be in the slides that will be sent out to everyone. And I do, again, want to thank all the presenters. Great information. They did a lot of preparation for this webinar. So thank you again to the presenters. Finally, just a little bit of last minute housekeeping. Please consider subscribing to the DFPI's monthly newsletter. There we publish consumer alerts, events that are upcoming, and a lot of other really great consumer information. This webinar will be published to our YouTube channel, so please subscribe to our YouTube channel so you can see this webinar and other ones that we do. Also, I have a feedback survey that I'd really like you to complete. Please let me know how to improve webinars, future events. Do I talk too fast? Do we have too many slides? Feel free to submit your feedback to me. I'd really like to improve. And finally, our next webinar for next month is Protecting Yourself from AI and Crypto Scams. That's in partnership with Assemblymember Petrie Morse. That's on July 19th at 6:30 p.m. And you can register with the link below. With that, I want to say thank you. Thank you again to all the presenters. Thank you to you all for joining us on this webinar. And please take care of each other and yourselves. Goodbye.
Goodbye.